Hey everybody, I'm Mike Desepoli and welcome to the Heritage Market Pulse for Friday, September 24th, 2021. We hope you had a great week. The markets really sure had one heck of a week. A tale of two stories in the markets. We had sell-offs, we had rallies, and at the end of the day, the market, just like last week, looks like it's going to finish the week almost exactly where it started. And that type of activity, it can cause anxiety and pain when we go through it, but it's the type of markets, it's the type of pullbacks, the compression that we need, we believe, for the market to move meaningfully higher. So let's talk about the market activity this week. We saw a very broad pullback on Monday, a lot of red on the screen. The intraday low on the Dow Jones on Monday, the market was down at one point over 900 points. The reason for that was some concerns around the property sector in China. One of their largest developers, there was concerns around debt defaults and the effect that that might have on China. And we believe it was exacerbated in the U.S. on Monday because China's markets, were closed for 3 days for the holiday. So naturally, the markets there didn't get an opportunity to react, and we think that caused some unnecessary selling here. Then for the 3 days that followed, we saw very broad-based rallies in the market, the type of activity that you want to see after what we believe was a short-term low on Monday. You can make those type of assessments based upon certain indicators that the market presents sometimes, and the way the market looked on Monday with the sharp move lower, with a fever pitch of fear in the market, and the fear and greed index at that point getting down to 18, that was something to us that looked like a short-term capitulation low, where a lot of retail investors just fold their hands, sell their investments, and try to get out of the market. We see the strength that follows. We've seen some recovery in our sentiment indicators with the fear and greed index now sitting at 32. So a slight improvement from 18 to 32, but still in fear territory. And as you know, that is something we like to see with a very contrarian view of the market. The big news this week, and it seemingly is always big news when the Federal Reserve is involved, was Wednesday's Federal Reserve press conference, which wraps up a two-day policy meeting. As we had been saying for quite some time, we expected no change, but nonetheless, there was still some unease in the market about what the message would be. And we got what we were hoping for. No change in interest rates, no change in monetary policy, and no tapering of the monthly bond purchases at this time. They started to set the table for that happening at some point in the future. We still believe it's going to be some months off, allow them to reconvene a few times and assess some incoming economic data as those days and those potential meetings get closer. We're coming to the end of the third quarter. We're about to really turn the corner out of September here. There's only less than a full week left. We talked a lot about September seasonality, and now we're looking to get into a more favorable time of year as the fourth quarter kicks off towards the end of next week. But we'll be watching very closely next week to see if the market can continue to follow through. Will that confirm to us that last Monday was a short-term low? And if so, we feel very confident that the direction from here is higher. So if you have any questions, reach out to us. Always happy to talk with you about anything on your mind. We hope you guys have a great Friday and a great weekend, and we'll see you back on Monday for the Heritage Market Minute.